Going over the IRS's interactive tax assistant tool that will help you determine whether or not the distribution from your Roth account is taxable. So as we're recording this video, it's towards the end of 2023, so you can use this to determine the taxable or non-taxable status of a Roth distribution that you completed earlier this year, or you can use this to determine whether or not a distribution you're considering may be taxable. As long as you are very specific in the circumstances that you're considering this decision, you can use this as a planning tool for future distributions. So it doesn't talk about either the return of a Roth IRA contribution or the return of a prior year excess contribution or a corrective distribution of excess contributions. So it's literally just about, I took a bunch of money out of my Roth account, answer these questions, and you'll be able to understand whether or not that's taxable and for what reason. So you do need a little bit of information for your Roth IRA distribution. You'll need to know whether or not you have a cost basis. Your cost basis essentially is the amount of your contributions in your Roth IRAs. And then you'll also need to know the first year that a Roth IRA was first established for your benefit. It could be a Roth account distribution, so like a retirement account with is specifically designated as Roth. If the account has earnings and the first year that you made employees to the plan, or the employee if you're a beneficiary. So that, according to this, it should take about 15 minutes. This does not cover international taxpayers. If you're a resident, a non-resident or a dual status alien, you'll need to check out the international taxpayer section because there are additional rules that may apply that are outside the scope of this ITA. So with that said, let's go ahead and start. So we're going to determine whether or not 2022, 2021, or 2020 distributions are taxable. So even though the tax laws do change slightly from year to year, I do believe that you can use this in a hypothetical sense. It's not going to be 100% guaranteed because there might be a change, but you'll at least get a decent indication about whether or not a distribution is taxable. Upfront, the best possible way that you will be able to determine if a future distribution is going to be taxable is by talking with your tax professional, your CPA, enrolled agent, what have you, and being able to talk about this in the course of a tax planning meeting that most people do starting mid-year. Like tax planning usually is between June and September or October of a year. So that's the best way to determine. But if you're insistent on doing it yourself and you feel like you have a pretty good understanding of the principles and you're relatively current on year-to-year changes, then this would be a decent mechanism to be able to kind of have an educated guess. So let's talk about the 2022 tax year and what type of Roth account was the distribution taken from. So it's probably either a Roth IRA or a Roth workplace retirement plan. So designated Roth account. So let's talk about a Roth IRA. So was the distribution either a return of contribution or the return of a prior year excess contribution? So as always, you can look up any of these highlighted fields to get a better indication. We're going to say no. Was it from an inherited account? So let's hit yes. Did you inherit the account from your spouse? No. Was the distribution to an inherited IRA, qualified charitable distribution, health savings account, or none of them? We're going to put none of them. Has it been at least 5 years from the beginning of the year in which a Roth IRA was first established? Let's go ahead and say yes. So there's a 5-year rule that talks about how long you've had a Roth IRA account open. The IRS has 2 rules, or the Internal Revenue Code. The first one is simply, has your Roth IRA been open for at least 5 years? That's it. So in this instance, it's not taxable. Now, we'll go back and run through another scenario or two, but the second Roth 5-year rule has to do with Roth conversions. So if you've never done a Roth conversion and you never plan to do one, you'll never have to worry about that 5-year rule. But basically, when you start talking about the basis of your contributions versus Roth conversions versus earnings within your account, your drawdown starts with contributions first, then with Roth conversions, and finally with earnings on that. So when they talk about the second 5-year rule, each Roth conversion, if you do Roth conversions each year, each Roth conversion has to be in that account for at least 5 years before you can withdraw it. So that is the second Roth 5-year rule. Let's go back a little bit and let's just say that we did not inherit this. It was from our IRA. Was any of this rolled over or transferred? We'll say no. Has it been at least 5 years since the beginning of your Roth IRA? Yep. Were you age 59 and a half or older? Well, if you were, that pretty much answers the question, right? So let's say, no, I wasn't. Now it's going to ask certain questions that will see if you can find an exception criteria to any early withdrawal penalty. So it wasn't made because we're disabled. It wasn't made to buy a home for a first-time home buyer. Was there a previously taxed amount? Did you have basis in your Roth IRAs when you first took it? Let's just say yes, we did have. And was the distribution more than the previously taxed amounts? So this is your conversions or your contributions. Have you made a conversion to your Roth IRA after 2017? So again, we're talking about the 5-year rule. We'll just say no. Distribution is not taxable, right? So you would need to complete IRS Form 8606 to report your Roth IRA distribution. We've written articles about Form 8606. We'll put a link to that in our show notes. One last thing, let's just pretend that we did do a Roth conversion. Oh wait, hold on. You did make a Roth conversion, but it's saying that this is not taxable. The Roth IRA distribution was not taxable. However, if you were under 59 and a half and a Roth conversion was done, you may be subject to additional tax on early distribution. So you would need to use another ITA tool, the Interactive Tax Assistant, for do I meet an exception to the additional tax on an early distribution from an IRA or retirement plan. So that's outside the scope of this video. We'll be producing that video fairly shortly, so stay tuned. That's all we have for this video. We also write a lot of articles on a variety of tax topics, specifically tax forms, and we also have a lot of articles on Roth conversions. So we'll put links in our show notes to the Roth IRA section of our website. We'll also include links to any articles and videos that we've produced on some of these forms and topics discussed in this video. If you want to find anything else, you can simply go to our website, teachmepersonalfinance.com, type in IRS Form 8606 if you want to pull up our article on non-deductible IRAs. So if there's a specific topic, search for it. If you can't find it, please post a comment in the show notes or in the comment section. I'm always looking for additional topics to write about, and if I can't write about it, I'll try to produce a video. So if you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, post them in the comments section, and I will do my best to answer them as quickly as I can. Thank you very much, and have a great day.